The Indian economy has been going through some choppy waters since last year, 23rd May 2019 to be exact, when Narendra Modi's government came back to the parliament with a huge majority. So while the stock markets picked up during that month and probably since February 2019, stock markets have been pretty much a slump over the next few months and probably is still now a little subdued, with certain companies performing and driving Nifty and Sensex while the others are really not doing so well. As a matter of fact, if you take corporate performance till Q3, it has been moderately very stagnant and not so growth worthy. If you want to decipher that and understand what's going on with the economy, I can probably help you a little with that. Hi, if this is your first time on Insignia Investments, welcome. My name is Rupratim Dotto, and just like you, I am a person who enjoys economics and I love to explain things to people who want to understand it probably in a little simpler way and probably in a way that can help them mint some money. So without further ado, let's begin. So in my understanding of what has been going on over the last few months, there are probably three broad strokes to the Indian economy. Now, you might have read a lot, you have heard a lot of people say a lot of things, and specifically, I think this has been a year where ordinary people have come out on the streets to say a lot about how the economy should be. But while I usually discount them, I'm probably going to focus on things which I can quantify. The first broad stroke of what's wrong with the Indian economy is the automobile sector. If you're an investor in something like a Tata Motors or a Mahindra or an Ashok Leyland, you would have already realized this. You have burnt your fingers probably if you have been holding it for like 1 year now. But why is it so bad? Is it really that bad? Are Indian cars bad? Is the industry bad? Is corporate governance poor? No, not really. What's bad is the way the industry has been structured. So before I go to the broad stroke of what the automobile industry is and how it has kind of fueled where the Indian economy is today in the quagmire, we understand that the automobile industry feeds two core industries of India. So these are two overweight industries in the calculation for the Index of Industrial Productivity, IIP. One is crude oil and the second is steel. Because automobile forms a huge portion of a growing country's consumption, what does that mean? It basically means that people were slowly kind of moving from lower middle class to middle class and middle class to a little higher upper echelons of the society. People make discretionary purchases, and the most common that India takes for granted is that of purchasing a car. People expect, the general understanding is that if you start earning some money and a decent amount, you will buy a car. And because India is a developing country, a lot of people moving from probably lower middle class to middle class, there are a lot of purchases of cars. In addition to this, you understand ancillary industries that support things like, let's say, logistics, let's say, transportation activities, public transport. They have also been growing, which kind of drives the consumption of automobiles. But ever since last year, there has been kind of a slowdown in the auto industry, and that has been evident if you have been reading papers in the amount of inventory people have been holding. In addition to this, BS6 kind of skews this problem a little bit more. So BS6 is a standard of emission that the government will make mandatory from April 1st, 2020. So, which kind of adds to the problem that we are already in. But I probably believe that the problem does not start with introduction of some environmental norms or probably the base expenditure related activities, but it starts somewhere much more simpler, which is people expending. So if you take how people have been purchasing cars in India, it is majorly very credit driven. You have never heard people say, right, like I saved 10 lakh rupees and I purchased a car, or I saved 8 lakh rupees and purchased a car, or I saved 2 lakh rupees and purchased a bike. No, it doesn't really work like that, right? You wouldn't have heard most people say it like that. What usually happens is people go to one of the financiers, banks, some kind of other financiers, and they tell you that we are going to help you make the down payment and we are going to help you make this and make that, and you pay me later. so-called EMI system, and people have been kind of pushing their purchases from future to today. A lot of economists have been actually taking the growth in credit as a metric of economic activity in India. And a lot has been written on it. If you have been reading papers for the last 3-4 months, you would have read a lot about how credit growth has been kind of slowing down and how that is going to affect the economy. But in reality, that thing and the amount of effect it has on the automobile industry is where the stress is. Because the basic understanding of India has this premise that when people start earning, the discretionary expenses will increase, which will drive the economy and help in pushing demand. But in reality, probably somewhere people would have been a little more rational in estimating that with increasing incomes, people would actually probably drive towards investments, savings, and probably making more fundamentally sound financial decisions. So while credit is brilliant in helping drive growth and everything, but probably it's a little more fragile than a system where investments and savings are driven forward. So that brings us to the second broad stroke of what's wrong with the Indian economy. That's the credit lines themselves. I'm sure over the last 1 year you would have heard NBFC stress and a lot of other jargons being thrown around about how credit lines are drying up. It's simply because of the fact that while India has a really nice banking system, it's kind of rigorous. So it's not really easy for every Tom, Dick and Harry out there to go and walk into a bank and get a loan. Because most people really do not keep traces of where their money is coming from, how they're going to plan and expend it, how they're going to invest it, and banks really want to know that. And hence there is demand for money, and some lenders have kind of opened up not so savvy lending formats and have been kind of pushing credit in the market. So, and people have been spoiled for that to some extent. Everyone uses too much of credit card nowadays. But keeping that aside, there has been this general belief system that everything can be EMI'd. So you want to buy something that you should probably buy 5 years later, you can buy it today. Because there are credit lines available, there are financiers standing right at your doorstep telling you that, you know what, you can buy it today but only at 14%. You can buy it today but only at 13%, which is exorbitantly high. Look at it rationally and you will probably realize that the rates at which lending was done over the last 1 year before the RBI stepped in and cut some leg out of that interest rates, things were really not rational at the rate at which people were kind of purchasing things, driving the demand and pulling the trend lines. And it is pretty much visible if you see the amount of credit growth there has been over the last 2 or 3 quarters and compare that against what was there probably 2 or 3 years before. You will see there is a stark amount of difference. What can be done? Probably habits is what can be done. People need to go to a bank. There is an optimal debt equity mix. People should make some savings, people should also build some assets, and people should also take some debt to help in managing the best cost at which you procure things. But that doesn't mean that you should buy 5 years later and you buy it today because you want to. That's an impulse purchase, and probably that is somewhere related to human behavior and what is wrong with the economy at large. That brings me to the third broad stroke of what's wrong with the Indian economy, which in my understanding is kind of a litmus test of whether things are wrong or not. It's like resources running away from conventional investments towards safe investments. What does that mean in simple terms? If you have money, instead of investing it in the stock market or in some other format which is a little risky, you kind of start purchasing gold or silver or real estate or something like that which you think is very tangible and very safe. Gold usually remains very flat, which shows that economic activity is high. And gold only pops up its head in a massive fit only when people start running away from everything towards the safe assets. And gold has been rallying since October 2019 till today. What started off as like a 31,000 for every 10 grams is today around 43,000 for every 10 grams. That's substantial rise. So that's the litmus test kind of shows that yes, people are stressed out. The markets are stressed out. What can be done? In my understanding, limited understanding rather, is there is a learning here. Firstly, we have an over dependence on a certain set of industries which kind of needs to be kind of walked away from. Credit lines are not free, so we need to be more rational in pulling out credit lines, and banks as well as lenders, even if they are not really under a lot of aegis of RBI and a lot of scrutiny, should also make some rational decisions when lending. And third and foremostly, we need to make normal investment vehicles attractive. And the only way to do that is to improve corporate governance, improve corporate performance, and believe in the growth story of India. While that is a little subjective, the earlier two relates more towards fiscal discipline, which can be done. So I might be right, I might be wrong. I want to know what you think about it and what you really think is the problem with the Indian economy. Please let me know in the comment section below. You can reach out to me on any format, Instagram, Facebook, even on email. All are provided in the description box below. I hope you have enjoyed this. If you did, feel free to consider and subscribe to this channel. And I'll be coming back to you with more and more articles about how the world of finance works. That is all from my side. Thanking you. That was Rupratim Dotto. Have a nice day.